expenditure. Note this, firms do not only have assets and liability, also they have some payments made to them and some payments they made to other firms. Because there's going to be transaction. Can you just please sit down properly and your legs? So also they make payments to firms, and firms also, other firms also make payments to them. Do we understand? So making payments to firms means that the business is having an expenses. And when other businesses make payments to them, it means they've received an income. Do we understand income here? Yes. So look at what I said. Income is the amount of money received by a firm in the course of transaction. That means that business has received a certain amount of money because it has transacted with other businesses or other customers. Then expenses. These are payments. These are payments made by the business during the course of a transaction. So the business also transacts with other businesses. Example for paying rent. Maybe the business doesn't have its own premises. It rented it. It's a rented premises. So it has to pay. That's an expenditure for the business. Do we understand? Maybe the business renders services to customers or clients. It receives cash or check on behalf of that. It is what an income for the business. Do you understand the difference between income and expenditure now? Do you understand income and expenditure?
Yes.
Great. So now we have this information. In January 1, IJ began what? Began capital. IJ began business with a capital of $80,000. So I'm just going to write the information instead of January 1, capital of $80,000. In the business account, in the bank. This account. That was on the 6th, right? It house to another person or to another business. So we call that rent receivable. What do I call it?
Rent receivable.
That was on the 7th, right?
Yes.
Rent receivable. How much is it, please?
Rent receivable.
$95.
95.
Check, right? $95 by check. Now please look at the board. So these are all the information we have. This information contains both the, can you stop writing this? This information contains both assets, liabilities, and income and expenditure of IJ. Do you understand? Do we get it?
Yes.
So the first thing we have to prepare is the bank account of IJ, because all the transactions, I told you to stop writing, right? Because all the transactions went through what? IJ's bank account. Are you with me?
Yes.
So all these transactions went through IJ's bank account. So the first thing we have to open is what? IJ's bank account. So we have bank account, ledger. For who? IJ, right? So start. We have our debit here, our credit here. Okay. So the first transaction was on January 1, right? January 1. Capital of 80,000 in the bank. So IJ received, the business received capital, right?
Yes.
On January 1. Okay. So 80,000 was received into the bank account. So we have capital here. And how much? 18,000. Is this one clear?
Yes.
Great. On the same January 1, rent was paid 400 by check. Rent payable. That means you paid out. And what did I tell you about when you give out? What is it, a credit or debit?
Credit.
Okay, great. A credit balance. So we have January 1. January 1. Rent. Rent what?
Payable.
Payable. How much is it?
$400.
$400. That's clear, right?
Yes.
So whenever you do that, just take it away. We've done this, we're done with this. On the second, fixtures and equipment. Remember, we've opened, we need to open also rent payable account. Yes or no?
Yes.
Great. So, and we have to open capital account. Remember that also, right?
Yes.
Good. On 2nd of January, fixtures and equipment 30,000 check. Fixtures and equipment 30,000 was bought from the bank, right?
Yes.
So is fixtures and equipment a debit or credit?
Credit.
Why is it credit? Because you paid out, right?
Yes.
So we have January 2, right?
Yes.
January 2, fixtures and equipment. How much is it? 30,000, right?
Yes.
30,000. Okay. I think you know why, because the board is small. That's why we're writing it like that. Then on the second, that's all about on the second. We have to open fixtures and equipment account also, right?
Yes.
Good. On the third, insurance 250 by check. So he paid insurance. So when you pay insurance, what does that mean? Is it a credit balance or a debit balance? Insurance, you paid insurance. You know what insurance is? Insurance is the transfer of risk from the shoulder of the owner of an asset to the shoulder of the business, of a business or of an institution, which is in the insurance company. But when you are opening an insurance, when you have an insurance, you have to pay identity. That is the fee you have to pay to the insurance company. So you are paying out insurance. So when you pay, is it a credit or debit?
Credit.
When you pay, is it a credit or debit?
Credit.
Great. So on the 3rd of January, right? January 3, insurance was paid, right?
Yes.
How much is it? Insurance 250, right?
Yes.
250. Please take note that they are all hundreds and this is 1,000 and this is 10,000, right?
Yes.
Okay. Then we have another third. On the third again, AB Loans gave 10,000 check to Ajay. Ajay received 10,000 check, right? From AB Loans. Is it a debit balance or credit?
Debit.
Great. Ajay received. You credit the giver, you debit the receiver. So on January what? On 3rd of January. Are you guys with me?
Yes.
Okay. AB Loans. AB Loans. How much is it? 10,000. Any question up to now? No, great. Then, this is done. This is done. On the 5th, purchases of motor vehicle by check 9,000. On the 5th, January 5th, right?
Yes.
You purchased. You paid for a motor vehicle. So paying for a motor vehicle, is it a debit or credit?
Debit.
You paid.
Credit.
Credit. Great. So 5th of January, right? January 5. What was paid for? Motor vehicle? Motor vehicle?
550.
How much is it?
50.
Motor vehicle? 9,000. 9,000. Motor vehicle. Paid for. It's a motor vehicle. It's an asset. Then on the 5th, there's motor expenses. There's difference between buying a motor vehicle and paying for an expenses on the motor. Paying for a motor expenses, it's an expenditure. It's an overhead. Maintenance. But a motor vehicle is what? It's an asset, right?
Yes.
So now on the 5th again, motor expenses $50.
Yeah, credit.
Great. On January 6th,
It's 50.
motor expenses.
Listen, it's 50.
On the 5th,
Yes. And you don't have to do January 5.
motor expenses, how much is it?
50.
Great. Do we have any other one? Okay, move on. Then, loan. Malika gave loan to Ajay. Ajay received the loan from Malika. Is it a debit or credit balance?
Debit.
Credit or debit?
Debit.
Debit, great. So, January what? 6. January 6. Malika. How much is it?
5,000.
5,000. What else do we have there?
Credit receivable.
Rent receivable. Now, rent receivable.
Debit.
Rent receivable is what?
Debit.
So why did you say it's credit before? You receive. It's not paying. You are not paying. You are receiving. So whenever you receive, you what? It's going to be a debit balance. So January 7. Rent receivable. Right?
Yes.
How much is it? 95. Any question about this? So this is Ajay's bank account. Do you have any question on it?
No.
So we have to open ledger for each respective transaction. Is it clear?
Yes.
So we start with capital, right? We can start with capital. So we have capital account, right?
Yes.
So capital is on the debit side here. So where is it going to be here?
Credit.
Please look at the board.
Listen.
Capital is
When it's calculated and when it's credit and this it's debit.
on the ledger.
Yeah.
Yeah. This is the general ledger for the bank.
Yes.
So capital is on the debit side in bank. It will be where here.
Credit.
And what is going to be the name?
Bank.
Thank you. So we have January 1 bank. How much? 80,000. 80,000. Is it clear?
Yes.
Do you have any other capital?
No.
Any other capital there? That's all about the capital. We're done with that. Okay. So the next one is, should we open the January 1 again? Let's open rent payables account, right? Rent payable. So we have rent payable. Rent payable. Rent payable is on the debit side here. So where will it be here?
It's in credit, it will be in debit.
Do we understand?
Yes.
So here we have rent payable. How much is it? January 1, right? January 1. Check. Bank, right? Bank. How much is it? How much?
Receivable is 400.
400. That means rent payables account received the money from Ajay. Do we understand?
Yes.
Great. The third one, January 3. We open 8 billions, right?
No, Mr. FNF.
On the second.
FAF.
Yeah, on the second. So we have fixtures and equipment account. Fixtures and equipment account. Are you guys with me?
Yes.
Okay. Debit. I'll write this one. Okay. So fixtures here on the credit side. Where will it be in its own account? On the credit side, there will be where?
Debit.
Debit here. For every credit entry, there must be a corresponding debit entry. So, January 2. January 2. Bank. How much is it, please? 30,000. Do you have any question up to now? Do you have any question up to now?
No.
Great. So we go on. I think I can up the up fire.
Sorry, yeah.
So, what else do we have? We're done with on the second. So go to the third. Insurance account, right?
Yes.
Are you guys, you have to be communicating. Are you guys with me?
Yes.
Insurance account. Insurance is on the credit side there. It will be where here? Debit side. Because insurance received the money from IJ. Do we understand?
Yes.
Great. So we have January what? January 3rd, right?
Yes.
January 3. Bank. How much is it? $250.
$50.
Any question about that?
No.
Okay. Then we open. I think I can log this information. I think so.
I never tried it.
Yeah, we have the information on the text. You just.
Okay.
I think I can log the
We
information.
should leave the system motor.
Here, right?
Yeah. Leave the enter.
It's just been.
Sorry, yeah. Search in the book.
It's in the book.
I'm finished with this.
But I just told you about the language, right? The next one. What else do we have here? This done. Insurance on the 3rd. Then we have on the 5th. Motor vehicle. Right?
Yes.
Motor vehicle. Accounts.
Oh, yes.
That's on the debit side.
Debits and credit. Motor vehicle is on the credit side. This is where? Debit here. I want the date. January what?
January
5. Bank. How much is it?
$9,000.
$9,000. Then what else do we have there? We have motor expenses. Motor expenses.
On the debit side.
No. No.
Yes?
I'm sorry.
No. Motor expenses. How much is it? 50. So January what?
5. Motor expenses.
Bank.
$50. $50.
What else do we have? We have just one more, right?
Yeah.
And it is rent receivable. Rent receivable. So, rent receivable, where is it? How much is it? Rent receivable, January, yeah? It will be what, yeah?
Credit.
Yeah, so January 7th, right?
Yeah.
How much is it?
$95.
$95. Is it clear?
Yes.
Any question about this?
No.
Right, what?
95,095.
95,095. So, here we have 95,000 and 95,095.
Yes.
Okay. What's the other side, please?
It's 39,700.
What?
39,700.
39,700. So, on the credit side, 39,700.
700.
Okay, so on January 7 balance. So now take this away from that for me, please. Take what's the difference between this and 95,000 and 95? 5, 9, 3, right?
Yes, sir.
Then it's 14. 14 minus 9. 5, right? 5, right? 14 minus 9, 5.
Minus 39.
14 minus 9, just as 5. Then we have 8 here, right? 8 minus 3, 5. 55,395. So here you write January 7, balance carry down. What do I call the balance CD of how much?
55,300.
55,395. Please make sure your 100, your unit is unit, your tens is tens, your 100 is 100, your thousands is thousands, your 10,000 is 10,000. It's just because of the board here. Is it clear?
Yes.
So we have the total now. What's the total here? It's going to be the same here. 95,000 what? And 95. So this is a balance carry down. Here, if this is your balance carry down, in this account it will go balance brought down. What do I call it?
Balance brought down.
January 7, balance brought down. How much is it? 55,395. This is how we balance it.